Next on NCBA's Cattleman to Cattleman.
On this week's special edition of NCBA's Cattleman to Cattleman, we sit down with the experts from CattleFax to talk about the current state of the beef industry and to get their thoughts on what's ahead. NCBA's Cattleman to Cattleman starts now.
And now, NCBA's Cattleman to Cattleman with host Kevin Oxner.
Hello and welcome to this week's special edition of NCBA's Cattleman to Cattleman. I'm Kevin Oxner. Thanks for joining us. This week we're sitting down with the experts from CattleFax to get their thoughts on the state of the beef industry today. And joining us in the studio today, first of all, Mike Miller, Chief Operating Officer for CattleFax. We've got Kevin Good, a Senior Market Analyst, together with Brett Stewart, a Market Research Analyst, and also Chad Spearman, a Market Research Analyst for CattleFax. Guys, thanks for coming back to the show. We appreciate it.
Good to be here.
Mike, I want to start with you. Let's take a look at the general state of the beef cattle industry.
Sure, Kevin. Well, it's been a tough operating environment for all facets of the cattle and beef industry for the last couple of years, and I think probably the best way to categorize what we're going through right now is we have an industry that's really in survival mode. Mm-hmm. We've got a lot of things that have come at us that have hit the industry really, really hard in the pocketbook the last couple of years, and we've got some big picture structural things that we're dealing with. You know, one of the big factors for the entire industry is the fact that the overall size of our beef herd continues to decline.
That's right, sure.
We had some profitable years there back in the kind of the mid 2000s that we thought would kind of get us over the hump and hopefully get us to a point where we'd start to see some expansion, but we really haven't seen that. And now, given the impact on profitability that changes in beef demand and the economy and those kinds of things have had the last couple of years, added to that with this big rapid increase in overall operational costs that we've had for folks, it's pretty tough to make an argument out there that we're going to see any kind of increase in the overall size of the beef cow herd for the next couple of years. And that impacts all the different segments of the industry. You know, we've got overcapacity issues with the cattle feeding industry as well as the packing industry still with us today and very difficult to kind of overcome. And the fact that overall supply continues to decline it continues to put pressure on those folks.
You bet.
We think that we're going to continue to see a bunch of consolidation in both of those segments of the industry. And that's tough for people. I mean, it just really is a tough thing for everyone to go through. Demand has been a really big issue for us over the course of the last 18 months. And I know that we're going to spend some more time kind of delving in that into that on the show. But restaurant traffic has been something that has truly had an impact on our industry, and the fact that, you know, a couple of years ago we would have said that one of the parts of our beef carcass that we never have any trouble with is selling steaks or selling middle meats, and really that's been the biggest issue for us here over the last 18 months, and in fact has been quite a drag on us. You know, and some of the other things that we're continually concerned with are feed grains. You know, we've got an awful lot of volatility that is it's ingrained in our industry today because of some of the policies that we have in D.C. and some of the things that we're pushing through from an ethanol policy standpoint that are just going to continue to impact our industry, and most of the time it's going to be in a somewhat negative way.
Yeah. And I want to talk to you a little bit about that later as well, but go ahead.
Certainly. And then I think one of the other, you know, kind of big picture macro issues that we've got to deal with and got to continue to look at are the different kinds of policies that we've got in place in Washington, D.C., and how that's going to impact and have a ripple effect throughout the industry. You know, we've got an awful lot of environmental regulation that we think we're going to have to deal with here in the next couple of years. We've got cap and trade that is kind of front and center back there that we think that is going to definitely have an impact on our industry. And then what is our current administration going to do about trade? How are they going to help us? Because that's still a big demand factor. The fact that we still don't have Japan completely reopened is another factor that we certainly are dealing with. And so, you know, what we're doing with, I think what we're doing as a staff right now, we realize we have an awful lot of challenges, and what we're hoping to find every day is some silver lining out there and find some opportunities for people too, because they're there. But you know, we're an industry right now that's going through an awful lot of change, and that change is never easy. But we'll get through it, and I think we'll be better off for it when it's all said and done.
Kevin, I want to turn to you and talk specifically, about the fat cattle market and so forth. We've seen just lower prices on average this year as compared to the last couple of years, even when we're in an environment that production has been reduced. Is that all due to the economic situation we find ourselves in?
Very good question, Kevin. And as we start out, it has had a big impact on demand. We'll start out with just some background here. Beef production is down about 2.5% year to date.
Right.
Despite that, fed cattle prices are down about 11%. Year to date, we're averaging about 83.25. The last 2 years, we averaged closer to 92. So it's been significant. That's over $100 a head.
Absolutely.
Through the year. And as we look at that, we start to say, what's the main driver? And it's been demand. Mm-hmm. And we'll break that through over the next couple illustrations here over the next few minutes. But number one, we'll start at retail. Mm-hmm. Even though fed cattle prices are down 11%, retail prices year to date are only down about 2%. Now, if you looked at September versus September a year ago, they're down a full 7%.
Are they? Okay.
So retail demand a little softer, but not. That's not been the issue. The issue has been in some of the other segments of the business. Mm-hmm. One thing that has happened at retail, though, as we think about it, because of the amount of protein, the consumer's becoming more price conscious. We've seen much more of the product move on a featured price this year than past years.
Gotcha.
The consumers out there with the economy, they're looking for deals. Yeah. And they're going to lower price proteins, which hasn't helped us as much as some of the other proteins, as well as spending more of their dollars, as we'll talk about, at home versus away from home. Now, as you look at wholesale demand, and we're looking at some indexes here, wholesale demand has suffered more than retail demand. And the primary reason there, as you think about wholesale demand, is the product at wholesale is going a number of different ways. It's going to retail, it's also going to exports, and it's going to food service. And as we delve into that, food service is where we've really had the biggest challenge this year. Retail demand we would categorize as being a little softer, but not that much of a challenge. In fact, probably 5 to 6% more of our product is going through retail today versus a year ago because of the lack of the traffic at food service.
Yeah, and you haven't, any of us that have eaten at restaurants can just see it every time we go out, that they're just not as full. What would you consider to be the biggest challenges from a demand standpoint?
And I think it's that longer-term trend, especially it's been magnified the last 18 months or so. We're not able to get the higher dollars out of parts of the carcass, especially the steaks, as Mike alluded to, at food service. Yeah. The consumer is spending more of his dollars at home. You can see the long-term trend, and it's not just been the last 18 months. If you looked at the longer-term trend, dollar sales at food service has really been on decline for the last 3 to 4 years. At the same time, dollar sales at grocery stores and retail was on the increase. Now, if you look at the data, especially starting last October, when the recession really kicked in hard, the retail or the consumer has tightened its belt at both areas.
You bet.
Even though more product is going through retail, as we talked about, it's going at a more of advertised price. As you think about food service, and we broke that down looking at the different segments of food service. You can look at the fast food, which would be your burgers, Wendy's, McDonald's.
Sure.
They've actually gotten along extremely well here in the recession. In
right.
fact, same-store sales, as you look at this illustration, have remained above a year ago until the last 1 to 2 quarters. And finally, it's starting to hit home with fast food sales. Yeah. So they've gotten along extremely well. You take a look at the next segment, which is casual dining, which would be your Outbacks, your Applebee's, your Chili's, those type of people. Their same-store sales have been down in the neighborhood of 5, 6, 7% compared to year-ago levels here over the last 4 to 5 quarters.
Okay.
And so, there's expectations that could pick up a little bit as we go into the fourth quarter and on into early 2010. But part of that's just because of the depressed level we were at the first part of this year and late in 2008. Another example of that, taking that one step farther at food service, would be looking at your high-end steakhouses. If you looked at Ruth Chris, if you looked at Morton's, their same-store sales would be down 20 to 30% compared to a year ago.
Wow.
And that's a good illustration there of what the consumer is really doing. If he's eating out, he's moving from high-end to casual, from casual to fast food. And generally speaking, the consumer has gone from eating more meals away Now he's consuming more of his meals at home.
At home. Well, so talk to us about how that corresponds to other proteins. So is beef the only one that's being hit by this, or are other proteins suffering as well from this demand crunch?
They are suffering. You'd have to say because of a price point, they're probably not suffering as much as beef is, especially if you look at some of the retail data. Retail prices are not down as much for pork, and actually they're holding together extremely well for poultry, which is an illustration that the consumer is trading proteins, going to a lower price protein. The bigger pictures you think about not only the competitive meats, but the whole protein market as well. And we can break it down. We can look at beef. You know, here we are this year. Per capita consumption is going to be down about 1.2 pounds, or roughly 2%. It's a combination of smaller production levels, less exports. We're going to export about 4% less beef this year, year to date. We're importing a little bit more, though. And so we've got less beef on the market. The pork producers, even though they've had a tough economic time and are losing money, pork production is down 1 to 2%. They haven't been able to export the product this year. It's down 20%.
Wow.
So actually, there's more pork on the domestic market than there was a year ago, despite lighter production levels. So that's been a real challenge for them. You look at the broiler industry, they've responded. They had a tough go in 2008. They were losing money. They came into 2009, cut production 5%. Now they're back profitable. And as you think about that, with that kind of a production decline, exports have held together fairly well for broilers. We're sitting here with 3+ pounds less per capita broiler product on the market compared to a year ago. And so that's also been a driver for their business. If you kind of rolled that all together and looked at per capita supplies of all proteins, you know, it's down substantially this year, over 5 pounds, on top of a decline the last 2 years. So it kind of begs maybe a longer-term question. You know, per capita animal protein consumption in the U.S. this year is going to be the lowest levels in 10 years.
Wow.
And part of that has got to be a situation. If you think about the production models we've had the last couple of years, we have been in a loss position on all proteins at one point or the other. So because of that, we've liquidated some. We've had some increased exports until this year, and that's helped take some of the product away from the domestic market. But also I think it probably begs a bigger difference or bigger question as far as how much product will the consumer actually take on compared to what they've done historically over the last 10 years. So as you think about it and wrap it up, you know, the demand side is a real challenge to us. We have to get the economy rolled around. We have to think of especially food service as a driver there. Once we can get the people out and spending a little more money away from home, that's sure going to help support prices. Longer term, if you think about per capita supplies that we're going to put on the market over the next few years, especially as we look at the liquidation we continue to experience in the cow herd this year, we're going to have less product for the consumer out there. And that should ultimately lead to higher prices. We're just going to have to get a little help on the demand side first.
Yeah, it's always frightening, however, that once people start eating less, can we get them to increase per capita consumption over time?
Exactly. That's going to be a real challenge to us.
Yeah.